You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Join us now for the expert source for inside information on the options markets. It's time for Options Insider Radio with your host, Mark Longo.
Welcome back to Options Insider Radio, the interview program here on the old network where we welcome on guests from throughout the world of options and derivatives and proceed to pick their brains for the benefit of you, the listener. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the aforementioned network. If we sound a little bit different, it's because we're coming to you not from our studio in Chicago, but actually from scenic and sunny Florida here at the Options Industry Conference, where we get a nice cross-section of the entire options industry to come in and sit down and chat with you, the listener, here about all the fun things that are going on in the world of options. And our next guest is an old friend of the program. He is Kapil Rathi, the head of equity options over there at the Cboe. Kapil, welcome back to the program.
Thank you, Mark. As always, it's a great pleasure to be on the show. Always enjoyed talking to you and sharing as much as I can with your listeners.
Head of equity options at Cboe. You must be a busy guy. There's quite a few equity options going on over there these days.
That is correct. Yeah, I think we obviously the industry is having a hard time in keeping a count on number of exchanges. We have our hands full. At Cboe, we currently run 4 different options exchanges, 4 medallions. And it's been a busy year since we last spoke.
So you want to get right into the exchanges? We can do that. We can go right for the jugular, Kapil, if you want. But yeah, obviously it's a big topic of conversation here. I think we have Shelly from MIAX coming in a little bit after you later today, so I'll get to put it to him in a little bit as well. But obviously the industry is growing yet again, having another baby. This time it's coming from MIAX. They're going to 3 exchanges, bringing if they get approved sometime in Q1 of next year, bringing the grand total of exchanges in the U.S. option space to 16. Now, obviously, you guys have some skin in the multi-exchange game. As you mentioned, you have 4, the 2 Cboe exchanges and the 2 they acquired when they picked up you guys over there at BATS. So it seems like there's an interesting response whenever I say the old question of, how many is too many? But there's, a lot of exchanges, they want to kind of have their cake and eat it too. They don't want other entries into the space, but they still want to reserve their ability to be able to spin up a new one if they need to, right? So they need to be a little bit guarded when it comes to this conversation, because they know if they shut it down for one entity, then that shuts them down eventually too if they want to play in that game. So I'm curious, all that being a lead into saying, what are your thoughts on number 16 looming on the horizon?
No, again, that's a great question. I think coming from someone who has been a product guy in the options industry for the last 10, 15 years, I kind of look at these exchanges as just different products that we are offering to different industry participants. I think a great analogy would be, look at iPhone. You have iPhone 10, iPhone X, iPhone 8, there is iPhone SE, so there are, or a MacBook, like there are different type of MacBooks. And why do these companies like Apple design these different type of products? Because you can't really serve all the market segments with the same product. Same thing in the exchange space. The current regulatory structure does not allow one SRO to have different models for the same stock. Let's just say IBM. I can't have multiple IBM order books. But when we go out and talk to our industry participants, there are so many different segments out there, and everyone has their own need. Everyone has their own appetite. Just to give you an example, there are some really great market makers who provide great liquidity if exchanges can offer some rebates for that liquidity. While on the other hand, you have obviously the classic PFOF model where the retail flow provider is actually earning that rebate. So as an exchange operator, I can't pay on both sides, but obviously we have to figure out a way where not only we can attract the liquidity, we can also attract the order flow from retail industry. And in a way, exchanges are subsidizing that cost for the discount brokers to attract that retail order flow. So long story short, I think we cannot serve the entire market with one exchange. There are different segments. Every segment has different needs. And having these different order books, unless SEC comes in and gives us a sort of blessing to trade 3 order books within the same SRO, I think this is the right solution. Is 3 the right number, 6 the right number for one party, or 2 the right number? I think it's all up to each exchange to decide. And at the end of the day, I think it's more competition. Competition has never been bad for any industry. It has helped keep the cost low, at least the exchange cost or the fees that we charge to customer. We all compete very aggressively on fees to win that market share, and it does serve its own purpose.
It's interesting you bring that up because a lot of exchanges, have brought that up, that it's, not maybe entirely their first choice to want to have to spin up an entirely new entity, but that's the way the regulation is for the moment. Do you think maybe it's time to take another look at that regulatory situation? Because if that were to change, then you're right. We probably would see that 16 drop down to at least half that,
Yeah, and again, I think one thing to understand here is obviously in the options world, we talk about 15, 16 as a big number. If you look at comparable industry closest to options is equities. And in equities, there is Reg NMS. There are, I think, 12 or 13 lit venues. There are 40-plus dark pools where you can trade. So the choices that different asset classes have, these choices are there for a reason. I don't think we want to go towards, let's say, for example, the futures world, where exchanges essentially have monopolies on their own products, and they can charge the customer whatever they want to. So at the end of the day, it's a good balance, right? You don't want to make the field too crowded, but you do not want to stop the competition.
Speaking of competition and the issues maybe therein, there's not as much competition as there used to be on the market making side of the fence. And one of the big issues here at the conference has been maybe one of the unintended consequences of that, which is, of course, the liquidity issues. There's been a lot of popular media about this. In fact, we asked our audience before we came down here what should be top of our agenda when we head down to the OIC conference this year. And number one, with somewhere around half so far in our poll, is options liquidity concerns. A lot of them have that top. Actually, it's 45% right now, a live update, but with about a day and a half left to go here. So it has been interesting to see this has been percolating. This has been a kind of a subtext of the conference for a number of years. We've talked about it, on shows like this and kind of behind the scenes, but it didn't seem like it really percolated out into into the mainstream. But now even your mom and pop retailer are starting to become aware of this. We see the data here every year. Somewhere around 20 names do about half the volume in the business, and once you get outside that, it starts to really fall off pretty precipitously. So I'm curious for you. You guys are exchange operators. This is obviously an issue that's near and dear to your heart. What do you think we could do as an industry to maybe dial that back a little bit, maybe to grow that pie from 20 to 30 or even 50 names doing half the business? How do we reverse this downward spiral we've been in?
Right, that is actually a serious concern, and we at Cboe are taking a very deep look at the lack of liquidity or sort of limited number of market makers that are left out there is certainly not healthy for the industry. Options always have been a liquidity provider-driven market. The quotes on different strikes is our best advertisement out there. If we don't put our best advertisement, best quote, the retail is not going to trade. We at Cboe are aggressively pursuing different ideas. How do we help market makers to be profitable in this business? There is we actually announced yesterday here that Cboe is championing for a options market structure committee, where instead of each exchange trying to solve the problem on their own, we can have SEC give us a blessing so we all can sit down in the same room without any antitrust issue out there, along with other industry participants, and we can openly talk about these issues. Now, going back to the market makers, obviously, your original point, fragmentation is definitely not helping. The second is just the number of strikes that have grown. We are at 900,000 strikes at this point. The number of weeklies are just getting out of hand. And we don't think listing strike or additional strikes should be a competitive edge. It actually is not a competitive edge, because if NASDAQ lists and strike tomorrow, I can list it right away. Nothing stops me to do that. So I think having a central party like OCC kind of administer how many strikes should be listed, or if there is a better delisting process for the series that are not trading or that have no open interest for a while. That's one way to help out market maker, ease the pain. Obviously, there are some regulatory elements, the RWA issue, bank capital issues. Cboe is taking a very thought leadership approach, working with Washington on some of those macro issues. And then also it comes down to providing market makers right tools, right risk management at different exchanges so they can manage their quotes better. But this is definitely something that we are looking at very deeply.
So some of those suggestions have been bandied about for a while. So it sounds like Cboe would be in support of some sort of then, call it quote mitigation, strike mitigation, whatever the case may be, to not a delist, but maybe you turn some of those strikes that you have to update all the time but never trade. Maybe you make those RFQ or things like that to somehow stem the fire hose that's just assaulting these guys on a regular basis in terms of the thousands upon thousands of series and months and calls and puts they have to update continuously. So it sounds like Cboe is in support of some of those endeavors there.
That is correct. Yeah. Again, I think obviously limiting the live order book to the strikes where there is action makes sense. Keeping that order book alive for 900,000 strikes where there is hardly anything going on, it's just taxing the industry, it's taxing the exchange, it's taxing the market data vendors, it's taxing market makers. I think we will be very supportive of having some sort of RFQ mechanism for some deep out strikes where there is not much open interest, at least for a while.
Obviously, you came to Cboe through the BATS integration. One of the last things you guys did at BATS before the integration was Spikes, your old friend, the Spikes over there on the SPY, and now we have Spikes has a new life apparently with the folks over there at MIAX. They spell it differently, but it seems like it's pretty much the same thing. What are your thoughts on someone else taking another tilt at this effectively SPY volatility product?
Yeah, I think my opinion about that product hasn't necessarily changed. I was part of the team who was building Spikes during my BATS days. Our thought process always has been that it's not necessarily a competitive product to VIX, but it's something that may help grow the VIX ecosystem. So any sort of volatility index products whether it's the current VIX products or anything new. I think industry will grow together with these type of innovations. So we wish MIAX good luck, and we look forward to see how it goes.
They'll be in here in about 45 minutes. I'll pass along your words of encouragement to them there, Kapil. One of the other interesting issues, and it's kind of contradictory when you look at it, that our audience wanted us to bring up here at the conference. Their top of mind was options liquidity, but their second one was, and this is kind of a persistent drumbeat we see around this time of year, earnings season usually comes up the most, is the notion of after-hours trading for options. They all see an example where they buy, let's say, a call in whatever tech name, pick your choice, Amazon, and it moves 100 handles in the after hours, and it opens up $2, and that's deeply frustrating to them. They want to be able to close it out at the apex. So we see this a lot. This is up at 34% right now, still have this top of mind. This is an issue that's kind of been bandied about for a while, gets some life, then it kind of falls apart. I'm curious, what are your thoughts on even the viability of doing something like that in the options market in 2018?
So Cboe is actually the only exchange that currently has after-hours trading in some of our index names. And that primarily is driven from our international customers. Over the past few years, Cboe has taken a broad approach to reaching out to the global investors, so whether it's in Europe, Middle East, or Asia. And we've been actively marketing our index products to these different geographies to help out the traders, let's say in Asia or in Europe, in their trading hours. Cboe does operate a 24/5 market in our CFE futures as well as in some of the options products. So I think from an infrastructure, from a technology perspective, we're ready. And if industry is ready to move into after-hours trading in other names such as single stock, we will be there on day one. Now the question is, a product like or an initiative like this is not something that one party can unilaterally initiate, because at the end of the day, we live in this ecosystem. We have to work with our brokers. We have to work with the OCC, the back office system. So we have to carefully weigh the additional cost that we will add on top of the industry, not only just on exchanges, but the broker-dealers, the banks. Everybody has to take that additional cost. And if we think there is enough return on that investment as an industry, I think we should definitely do it. Jury is still out. There has been some movement at TD. Obviously, they announce after-hours trading in the equity market, especially in the single stock options world. I think if the equity market evolves, then option market will naturally come with that. But I don't think the option market itself can build upon an after-hours without an underlying market, because at the end of the day, you have to manage the risk, you have to hedge against where the equity positions are, so they go hand in hand.
Yeah, it's interesting because I've always been a fan, a proponent of some sort of after-hours liquidity, maybe at least just to take things off during earnings. But on the flip side, when we have issues intraday, those probably have to take precedence first before we launch some. As fun as it would be to have after-hours around earnings, maybe a limited earnings season pilot, for the weeklies for Google that week when there's an announcement. There clearly will be liquidity that week. Other weeks, maybe not. But so that could at least maybe drive some and maybe make it RFQ, something like that, so people know going in they're not getting the deepest in liquid, but at least they can get something.
Yeah, no, I think, and I actually commend what TD Ameritrade is doing, because at the end of the day, they are at the front and working with the customers. So if they can pump up the demand for the industry, I think everyone will follow through. And the brokers will come, the consolidators will come, and the exchanges will join as well. So kudos to TD Ameritrade for bringing another innovation in the equity space, and then it will eventually move into equities and equity options.
Well, it's a good thing you're here, Kapil, because number 3 here on our audience poll with 17%, so a distant third, but still up there, is people want to see the listing of crypto options. So you're the guy I have to talk to about this, Kapil. When are we going to see these things? The futures exploded out of the gate. You guys, CME, racing back and forth. Everyone's listing stuff. It was an explosion of crypto products. And then it's kind of been, they've been trading, obviously. They're doing well on the volume side. But everyone, myself, Warren Buffett, everyone wants to buy a put on Bitcoin. When can we do it, Carl? Kapil.
Right. So actually, Cboe, we are a firm believer in the crypto space. We don't necessarily try to project whether Bitcoin is going to be a $20 worth or $200,000, but it is an asset class. It is a tradable asset class. And we are taking a holistic approach to not only just Bitcoin, but the crypto, our president and CEO, Chris Kincannon, mentioned crypto complex, which essentially just kind of look into this with the broad mind, whether it's adding other cryptocurrencies on our current futures exchange or adding crypto options. That's definitely something that the team internally at Cboe is looking at. Obviously, there are multiple competing priorities that sort of this may be probably taking a back seat. And then obviously the final element is the regulation, right? So we are working very closely with the SEC and CFTC to see what's the appetite on the regulatory front for a product like this. There is definitely customer demand, especially someone who has been in the options industry for a while. I talk to my options customers, and there are a lot of options institution players who've been asking, what's taking you so long? So it is definitely a product that has some leg to it. There is demand. It's just a matter of working with the regulators, working with our own priorities when there is right time to introduce.
Do you think
these
there'd be
type of
more
products.
pushback, even though the futures are already approved? There'd be more pushback on the options getting approved, and even they could see there's a clear liquid underlying trading. You think they'd have some hesitancy on approving the options?
Could be. Again, I think that's where sort of the perception at CFTC and SEC, there are different
beasts.
Kind of regulators that we work with. Obviously, SEC is taking a different approach. We're trying to obviously get our ETF based on Bitcoin approved through SEC. So we're just kind of working one step at a time. There are a lot of innovative regulators out there now. They are embracing some of these cryptocurrencies. So there is a lot of open dialogue going on right now.
And one of the other impediments is, of course, the technology migration. You come from the tech world initially back in the day. How is that process going of integrating and migrating the BATS tech onto the Cboe and vice versa?
Yes, and that's exactly where I've been spending most of my time. I'm very happy to report that we are on track with all the dates that we have announced to the market. We just finished the CFE migration in February of 2018. And knock on the wood, that went amazingly well. No news is good news. C2 migration is scheduled for 2 weeks from now. So we're ready for that. That would be another big step. And then finally, the mothership C1 migration will take place in October of 2019. It is a long project. We're taking a very careful approach, especially with the Cboe, when we have some prime products like SPX and WIX trading. We can't take any risk. I think the Cboe technology footprint, Cboe functionality, the product space, I think is very rich space. There is a lot of great functionality that builds in the Cboe current system. Coming from BATS and EDGX, as we were building our BATS options business, we were growing on both PZX and EDGX exchanges. We still have some additional features to add. One of the latest feature that we added on our EDGX exchange was the complex book. Prior to the merger, we did not have the complex book, and as we looked at, we did a gap analysis of what do we need to migrate the Cboe C1 system onto BATS technology. That was an obvious gap. And as you can imagine, building a complex book is not something that you can do in weeks or months. It takes time. It has to be very carefully designed. And we did not feel comfortable in migrating the Cboe complex franchise, which actually has the largest market share in the multi-listed space, and SPX VIX, majority of the business is complex business. We didn't want to just put it onto an untested technology. And that experiment has worked out very well. We have built a pretty good kind of customer base in our EDGX complex book. The feedback has been amazing, both from the technology perspective as well as some of the interesting functionality that we have brought into the EDGX complex book. So we're ready. We're ready to move some of the Cboe complex book. Similarly, there are other things that we still need to build, especially Bats never had the index product. There are things that you need to make sure that, especially if it's a singly listed name, that there are some additional checks and balances. So over the next year and a half, we will be working very diligently on making sure all those tools are available on the current Bats technology, and then we'll migrate to Cboe.
So I guess you have your schedule set for the next year and a half. You know what you'll be working on for
yes,
the
and
future.
I'm proud to say that our technology team has never missed a date. So those guys are really men of their words. So I give a lot of credit to our technology team for that.
Well, Kapil, I'm glad we can get you on to check in on all things Cboe over here at the OIC conference. Before we go, if there's anything we didn't hit on, or maybe you want to leave our listeners a little bit of a hint, a little bit of a tease of what's coming on the pike from you guys over there at Cboe, maybe a little bit sooner than a year and a half. Now is the time. Your floor is yours.
Yeah, thank you for that. And like we said, obviously, next year and a half, our focus is quite strictly on the integration. We want to make sure that everything goes smooth, and not only from our perspective, but our customers are counting on it. We need to make sure that we test with them. We give them all sort of confidence during the different type of test activities. There's going back to the crypto world, we are extremely focused on how we can grow that space. We're looking at some new technologies like any other exchange out there, fintech space, machine learning, or the blockchain. We are exploring what we can do in there. And pretty soon you should see some interesting experiments in some of the prop names, some of the index names, whether it's bringing new index to the new product or bringing a new market structure to an existing index product. So the plate is full. There is a lot going on inside the Cboe offices, and the teams from both sides, the legacy Cboe side and legacy Bats side, are working extremely well. Just the experience in the derivative space that comes from Cboe side is remarkable, and you put the great experience that the Bats technology team, I think, can't ask for a better place to work for.
Well, Kapil, I'm glad to check in with you, and I look forward to seeing how all these new developments and some of these hints play out in the marketplace in the coming months.
Great. Thank you, Mark.
Thank you.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.